Hey everyone, welcome. In today's video, I'll be reviewing one of OCBC's RoboInvest portfolios and revealing one of my positions. If you're new to investing or just curious about how to use OCBC's RoboInvest, you're in the right place. First, to access OCBC's RoboInvest, you'll need its bank account and its mobile app. Once you're logged in, just head over to the Invest section, where you'll find a range of wealth products. Let's tap into RoboInvest. So, why did I choose RoboInvest? Well, robo-advisors are becoming popular for good reason. They offer a simple, safe, and passive way to invest without having to micromanage your portfolio. If you're into ultra-low effort, long-term investing, this is a viable option worth considering. Also, if you missed it, check out my previous video where I set the stage for this review. Once you're in RoboInvest, you can explore different portfolios based on your risk tolerance. If you're comfortable with higher risk, you might go for aggressive portfolios with big growth potential. But if you're Kia C or Turtle like me, then a defensive option like the Income Portfolio or Singapore Cash is King portfolio might be for you. The Income Portfolio caught my eye because of its flexibility and monthly dividend payouts. While its one-year return of 22.6% looks impressive, remember, past performance doesn't guarantee future results. One thing I really like about this portfolio is its low price fluctuation, almost as steady as an airport runway. This makes it less likely to experience sharp drops compared to individual stocks. Plus, those monthly payouts get deposited right into your account, which is always nice. You can adjust these settings using the Manage Investment button here. Now, let's dive into the makeup of this portfolio. 5% in real estate, 55% in equities, or what we call stocks, 38% in fixed income, or what we call bonds, and the rest is in cash for flexibility. In addition, the portfolio gets automatically rebalanced every quarter to manage risk, so you don't have to lift a finger. Here's a quick look at the key ETFs in this portfolio. iShares US Property Yield ETF, 5%. This fund focuses on US real estate and is up 10% since I bought in thanks to rising prices when interest rates fell. Global X S&P 500 Covered Call ETF, 20%. This one is interesting. Consisting of 20% allocation, this fund uses a covered call strategy, earning income by selling covered call options on the S&P 500. It's able to generate extra income if the S&P 500 moves sideways due to the time-decaying properties of sold options. Note that I don't recommend newcomers selling options or trading market derivatives on their own, as it is usually super difficult to master. S&P 500 Growth ETF, SPYG, 10%. Unlike the other ETFs, this one simply focuses more on growth than dividends, so it's geared towards price appreciation. Vanguard World High Dividend Yield, 15%. This is a global ETF with a strong US tilt, providing dividends from global companies' profits. Invesco S&P 500 High Dividend Low Volatility ETF, 10%. Another US-focused ETF, but this one prioritizes high dividends and low volatility. The remaining 40% is invested in bonds, such as the Strackers USD High Yield Corporate Bond, iShares JP Morgan USD Emerging Markets Bond, and iShares USD Treasury Bond, 20+ years, which behaves like the TLT ticker for those who are familiar with it. Bonds are known to have negative correlation to stocks usually, making them a useful form of hedging. What I like and what I don't. I really like how RoboInvest makes the portfolios more fanciful with its mix of funds. However, one significant downside is that about half of the portfolio's dividends comes from US-based equities. This means it's subjected to a 30% dividend withholding tax, which can eat into your returns. Also, if the SGD strengthens against the USD, our returns could be impacted even more. For larger portfolios, I might consider buying individual ETFs from the animal brokers to manage them myself. My expected returns, after factoring in dividend tax and monthly expenses, I'm conservatively looking at an expected annual return of around 4.5 to 5%, although OCBC targets a 5.3% yield. It is solid for a portfolio with lower risk if its market value and yield can appreciate over time. Overall, I don't mind holding the income portfolio in RoboInvest. It's a low-maintenance option that pays out dividends monthly. While there are some drawbacks, like the US dividend tax and monthly expenses of 0.0733%, I would like to wait further to see how these expenses will impact this portfolio's performance before doing a further evaluation. If you found this review helpful, don't forget to share and scroll through my links below and drop a comment if you have any questions. Thanks in advance.